union budget will be presented in the next few days, and clearly after demonetization, expectations of investors, of common man from the budget seem to have increased. To discuss what markets are expecting, Mahesh Nandurkar of CLSA, India strategist at CLSA, now joins us. Mahesh, thank you so much for taking out time for us. If you could just tell us, after demonetization, going into the budget, a lot of investors are expecting a lot of things from the budget.
Yeah, so clearly the expectation is that the demonetization has had some negative impact on the economic growth. Basically, I feel that India's economic growth story has got pushed out, say by 6 months or so. And there has been a negative impact, especially at the bottom of the pyramid. So the general expectation, first of all, is that one, the government will do something specifically towards the lower end of the economy, and to that extent you should see more of social projects being announced, being funded in the budget. That's one generic expectation, which should sort of also try and help and offset the negative or the slowdown that has been caused by the demonetization. That's sort of point number one. Point number two is also on the taxation front there are expectations. So we know that there has been this one umbrella statement made by the government a few years ago that they want to reduce the corporate income tax rate down towards 25%. So in the last 2 years we haven't really seen any progress on that. The market expectation is that maybe now in this budget the corporate income tax rate will inch down a little bit. Then there are also some expectations around the personal income tax rates. And finally, and I would say more importantly, the taxation on the equity capital gains itself, whether it is the definition of what is the long term, whether it is 1 year or 3 year. And also there are some outstanding issues as far as the foreign investor taxation is concerned, especially the recent circular issued by the CBDT, which has now been put on hold. So variety of issues that the investors are trying to get an answer for.
But markets have seen a run up, and really, as you said, that there has been a puncture in the economy. It may take some time to recover. So is it expectation of budgets that people are buying into the markets?
See, the thing is, India has underperformed quite a bit, first of all, over the last 12 months. So if you see among the larger economies, India is probably the biggest underperformer. Right, and this is something that we had sort of spoken about earlier, and what we now think is that once the data begins to improve, which actually it was showing some signs of before the demonetization. I'm talking about the macro data. I'm talking about things like your power generation, your steel consumption, cement consumption, autos, etc., and which was showing signs of improvement prior to the announcement on the 8th of November. So we had actually a good festive season, and the foreign investor interest was actually coming back into India, on the back of it. But obviously we had this event on the 8th of November, and the whole thing has got pushed out. But now, as it looks like, the negative impact of the demonetization is lower than what was initially thought. So the data, the macroeconomic data, has been slightly better. If you look at the December month data, whether it is, once again, the power generation, fuel consumption, has been slightly better than what the market was expecting. So that is making the foreign investors take a relook, at the market. But obviously, all these tax-related issues is one of the things that is holding some of that investment back. But thankfully, the domestic investors continue to support the market quite positively.
Tax issues are one, right? And the other is whether the government should give a stimulus or not. As you're saying that most of the data has started to see an uptrend. May not, maybe a big stimulus may not come in the budget.
See, when we say the word stimulus, we just have to be careful what exactly we are expecting, right? Because, this year, as in FY17, the fiscal deficit is 3.5%. According to the previous roadmap, the government's fiscal deficit target for next year was 3%. Now let's see what it gets revised up to. Maybe 3.25, 3.3, something like that. I don't know. But in either case, we're talking about a fiscal deficit still reducing, whether by 20 bips or whether by 50 bips is the question. But it's still reducing, and when the fiscal deficit reduces, it is effectively fiscal contraction and not fiscal stimulus. It could be a stimulus vis-a-vis where it would have been.
Right.
But simply on a year-on-year basis, it's still a fiscal contraction. It's not a fiscal stimulus. So, what we're looking at is basically just the reorientation of the government spending pattern. If it was spending on X, then whether that X goes down, maybe X minus 20, and Y maybe goes up Y plus 20. That is the kind of thing that we're looking at. I don't think the government fiscal stimulus as such is really there. I mean, when we say stimulus, then we're talking about 3.5 going up to 3.7 or 4%, which is what, let's say, US president is talking. He's talking about fiscal expansion. That's fiscal stimulus. This is not really a fiscal stimulus. We are possibly talking about less of a contraction.
Right. So, you talk to a lot of global investors who look at India very closely. Say if that number is 3%, as you said, is the target earlier, and maybe it comes to 3.2, 3.3. Do you think global investors would be worried?
No, I don't think so. Right. I don't think so. So I think anything up to even, let's say, 3.3, even the bond market, the local bond market, is also probably factoring that in sort of already. So I think the quickest reaction that you see for a fiscal deficit kind of a number is the bond market, whether yields go up or go down. I feel that if it's up to 3.3, there shouldn't be any negative reaction.
Right. When we talk about interest rates, they've already gone down. But a little bit of that extra expansion of 30 basis points that you just spoke about is needed to stimulate growth?
Yeah, I think so, because ultimately, when we talk about the government, needs to spend more on the, let's say, social housing or maybe some other social schemes. It's not that the government has a lot of money, right? I mean, although the size of the total central government budget could be 20 trillion rupees or 20 lakh crore, but nearly 90 to 95% of that is pre-committed. There is hardly any leeway the government has to sort of move around in that. So effectively talking about 1 to maybe 2 lakh crore at max is what the government has in terms of some sort of a leeway in deciding which way to spend. So there are various demands, right? You need to spend more on infrastructure, you need to spend more on social projects, you need to recapitalize the banks and so on. So given all these demands on the central government, there has to be, you can't meet all these demands if you are going for a 50 bips tightening of the fiscal deficit.
Let's talk about the tax numbers. So for last 2 years, whenever you write your budget report or, whenever any big sell-side broker writes, one of the key things is that tax estimates are quite optimistic going into the next year. That's what the essential number is. But with this year, demonetization, a lot of people expected to come into tax, a lot of business expected to go into the formal economy. Do you expect that tax numbers can grow pretty strong even for next year?
See, the thing is, while what you said, is very correct, that generally speaking, the government has tended to overestimate, but that was not the case in FY17. Just for records. So in FY17, the actual number is actually much higher than what they estimated in the beginning of the year, and that the fact that the actual number will be more than what the government is estimating was known right on day one itself. So it's not that, but the government actually erred on the cautious side, for a change. So, let's see what happens. But, clearly in terms of the YOY growth in the tax revenues, FY17 was very strong because of the increased excise duties on auto fuels. Now, that number is not going to jump. So like this year, we have seen excise duty collections growing by almost 30%. Next year, I would be surprised if it grows by 10%, because you've kind of you don't have that price element into that game anymore. So I would say that this year the tax collection growth is maybe about 15% or so. Next year could be 2 to 3 percentage point lower than this year.
So, but still it will have sufficient space for that 3 to 3.5 and 3 to 3.3 in terms of expansion.
Yeah, so I feel that if the government decides to keep the fiscal deficit, let's say at 3.3, and if you build in, let's say, some gains, coming in from the amnesty scheme, our expectation is that there should be around, say, 1 trillion or 1 lakh crore kind of declaration, which will mean additional 50,000 crore of the tax revenues. So, if you make some of those assumptions, then I think government will have sufficient funds to sort of promote some of its flagship schemes like the Housing for All, and the continued support for the PSU bank recap, and still maintain that 3.3% kind of a deficit number.
Right. Can you just talk about, how much of a corporate tax rate cut is markets building in? Do you expect a big tax rate cut? And not only because going into the budget, but also with the noise coming into US and some of the other developed economies, emerging markets may have to cut tax rates.
Yeah, that is a theme which is being talked about. So, first of all, let's see what US, first of all does. But having said that, I mean, Indian government has talked about tax reduction even well before, all this, noise about Trump cutting tax rate, etc. started. So I think in the best case, the market would probably be expecting, let's say, a 1 percentage point, cut in the corporate tax rate. But frankly speaking, I'm not so sure whether we will get that, because as I said, there are various pressures on the government finances. Already, I mean, FY18 we will also see the implementation of GST, and the central government also has to make good any potential loss of revenues by the states. And we are sitting on a pretty stiff number for the state government revenues. I mean, with FY16 as the base, the central government has promised a 14% annual growth in the state tax collection. So that's a pretty a tough number to meet. So there are various of these things. So I'm not so sure whether the market will really get what it wants, which is that 1% cut in the corporate tax rate.
Right. In the personal side, you expect a little bit of relief, and that is important for consumption as well?
See, I mean, while there are a lot of, there's a lot of chatter about personal income tax rate, but ultimately, if you see out of 125 crore of population, ultimately the number of people who end up paying taxes are just 2 crore or 3 crore, right?
Right.
And how much of really the sort of a reduction in the tax rate for the personal income tax will really have an impact on the consumption is therefore going to be that much limited. So I personally, if you'll ask me, I'm not expecting a cut in the corporate tax rate as well as in the personal income tax rate as well, because of various of these pressures on the government finances, as I mentioned. But yes, some of the market participants are expecting.
Right. Let's talk about indirect tax rates and the assumptions over there. With GST coming in, do you think any changes would come on the indirect side?
Unlikely in my view, because if you're looking at 1st of July as the date of implementation, then we are getting hardly 3 months for your excise duties or
any other indirect
tax to have any other indirect tax to make any impact as such.
How
Unlikely.
From the assumption, is there any way that you would try to find out what is the market factoring in from GST? How will the assumptions for indirect tax work?
No, so the thing is, as of now, GST is expected to be largely, revenue neutral, right? For the central government and for the state governments also. And so some state governments will actually end up making more, and those who kind of have a shortfall, the central government will make up for it.
Right.
So at this point in time, we know what the 6 slabs are. It's just a minor mapping that's needed.
So it's not very difficult from the numbers that they
Right.